In this week's update, markets ignoring the negatives, an extraordinary array of powerful trends, and gold continues to advance strongly. My name is Garry Davis. I'm an authorised representative of Primary Securities Ltd. Any advice is general advice only, and your personal objectives, financial situation, or needs have not been taken into consideration. All right, what happened last week? Start with the market perspective. You know it's a really full-on bull market when traders are just resilient to negative events, and there were potentially plenty of them that could have disrupted the market last week, but it didn't, and the market ended up higher again. We had on Thursday night this September CPI, which was at a level that in prior months this year would have disrupted the market because it showed that the trending down in inflation or disinflation may be going to get interrupted. But the market didn't seem to worry too much about it and just continued on. This, of course, along with some jobs data, puts a bit of a spatter in the works in terms of future rate cuts. So a bit of indecision there. Again, something that would have been disruptive to the market. But maybe it's just that we're back into a seasonally strong period of the year and the markets are just feeling more confident. We also had several severe geopolitical events that could have caused disruption as well, but didn't. So overall, you've just got to stand back and just, look at the simple and the obvious, and that is that the markets want to go up. It's about as simple as that. And of course, on Friday, US earnings season started and three of the main banks reported. They reported better than expected bottom lines, and the market definitely cheered that, that's for sure. So overall, a very positive week, and there's absolutely no reason to expect that the run from here to Christmas, whilst there every week will not be in advance, there will be some pullbacks, and potentially, given where markets are at, those pullbacks could be volatile. But you'd have to say, if you were going to flip a coin and say, will the market be higher or lower by the end of the year, the index, you've got to go with higher because that's the path of least resistance. That's where the market is going. Now, just before I continue, we strongly advise that you obtain your own investment, financial, legal, and any other advice that you need before taking action. And of course, as I cover every week, when investing in the stock market, you can suffer loss of funds, and that's why there is such a point made in these videos about having a plan and being clear and being disciplined about what you do. All right, let's move on. American stocks, the S&P rose 1.1% for the week. The NASDAQ did slightly better. And we also saw the equal weight S&P and the Russell 2000 also fractionally higher as well. So pretty positive all round. And at the S&P level, and I think at the Dow level as well, it was the fifth successive week of gains, which hasn't happened too often this year. In fact, I think the last time was back in May. Now, the banks, as we'll see, broke out to new all-time highs on those results, and they're trending very, very strongly. And semiconductors also picking up the pace again as well. So let's just go and have a look at those couple of charts there. So there's XLF. So that's the finance sector, and you can see it's all-time highs and quite a nice breakout as well, and on good volume. So that was the daily chart. That's on Friday. So not only were the prices up, but the volumes were up as well. So the market will supporting that. There's XLK, which is technology. We're still below the peak that was formed in the middle of July, but certainly heading back in the right direction. Again, you don't want to overcomplicate technical analysis. Just step back and observe the trend. And, a 3-year-old child could look at that and tell you that the market is heading up. And that's about all you need to know, really, other than particularly what sectors are actually rising the most. There's the S&P on a weekly chart. So you can see we had an interruption here in the first week of September. But other than that, the pullbacks have been very brief. We had 3 weeks here in April. We had 3 weeks in August, and we had 1 week in September. But other than that, it's been a very, very strong 2024 so far. There's the equal weight S&P and also the Russell. There's semiconductors, so always important to observe what semiconductors are doing in the States, because if they're doing well, then the rest of the market's going to be doing pretty well in terms of sentiment. And you can see semiconductors starting to pick up momentum again, and that's semiconductors versus the S&P. On a relative basis, energy has done well the last few weeks for obvious reasons with the oil price up, but that has been far better than the energy sector in Australia. Communication services, technology, so all the aggressive sectors towards the top. Down the bottom, we've got healthcare and consumer staples. They did turn up, but they're definitely lagging the rest by a long, long way. Soaring here, let's look at Australia. Information technology, the clear leader in Australia. It's just powering on. Banks doing okay. Small caps also right in the mix there as well. And then materials and healthcare. And of course, energy has improved in recent weeks, but it's still lagging pretty significantly. The US dollar was higher, almost back to 103. The 10-year yield continues to advance a little bit as the bond market starts to question whether the Fed's next move in November will be another 25 or 50 basis points. So that expectation is now getting significantly watered down. And as a result, the yields have moved back up again. The VIX finished the week at 20.5, which is a bit of a head scratcher for me. I don't quite understand that. But anyway, that's where the VIX finished for the week. Turning out Aussie stocks, our dollar just under 67 and just remains in a range between around 60, 63, 64 and 68. Our index gained 0.8% on the week, but you would expect will probably advance further on Monday. And Infotech clearly remains the leader. Small caps, there are just so many Australian small caps that are in very, very powerful uptrends. It's as good as I've seen throughout 2024 for Australian small caps. Now, it's not universal, and the strongest trends are to be found in very individually selected stocks. But if you've got a clear plan and you're a disciplined trader, then it's a very attractive environment at the moment. Turning now to precious metals, gold was up $4 to $26.57. Translating that to Australian dollars, we remained above 3,900. Silver edged down a little bit. I think most of that was probably in the final session of the week, but you're still overall trending up 31.53. When you look at gold stocks, this will become graphically obvious in a minute. Whether it's Australia or America or wherever it is, they're just working the normal momentum that you would see that goes with the gold price trend that we're seeing at the moment. Let me just show you what I mean. So let's have a quick look at silver. So there's silver on a weekly chart. We had a dip during the week, but you can see we've got a breakout. It's just churning around this sort of $30 to $32 level, but the trend is unquestionably higher. There's the gold price in US dollars. There's the gold price in Australian dollars, so also trending very high, but this is the one that I want to focus on. So there's the gold price in US dollars on a weekly chart. That's a very, very powerful trend. We've moved from 1,800 roughly a year ago to now be at 26.57. You would expect gold stocks to be doing incredibly well in that sort of environment because gold stocks mostly will amplify the gains in gold. And typically for producers, that is 3 to 4 times the percentage gain in the gold price. But if you look at GDXJ, that's what we've got. So gold stocks are drastically underperforming, but they were cheap relative to gold anyway, and they've done absolutely nothing to catch up. In fact, you've got to look at that chart and say, well, they're falling further and further behind in terms of relativity to gold. So I don't know what it is that's going to spike the momentum in gold stocks. There are a few. and there's a few silver stocks as well that are doing very well. But the vast bulk of the gold stock market in Australia is just not doing what you would expect it to do. And I'm not quite sure how you read that. It is what it is. But it certainly would reinforce the fact that there is almost certainly going to be a much better response from gold stocks at some point. The question is when and what does it look like? Other commodities, copper was down slightly, so was nickel, and that's really just consistent with what the US dollar was doing. Crude oil moved up again, of course, with tensions in the Middle East to 75.5, and there's the crude oil chart. All right, wrapping things up, the pathway to year end, I don't spend too much time thinking about it because I honestly don't want it to colour my thinking. I just want to remain open-minded and deal with the market, have your risk management plan, deal with the market as it unfolds. But the way things are sitting at the moment is that the fundamentals for a higher market are broadly supportive. There's not much question about that. And the trends are definitely supportive. And if you get down to the individual stock level, some of the trends are just extraordinarily strong. So the fundamentals are there. The trends are definitely there. So the money is flowing. This is not just, theoretical what the market should do. The money's actually flowing into these parts of the market. You just need to bring a clear plan and discipline, and I think you can do pretty well. It's important to keep whatever your activity is, keep it simple, because complex doesn't work, because when you throw into the mix our emotions that get engaged when markets start diving around, simplicity is required and simplicity works, so it doesn't need to be anything terribly exciting. Portfolio analyst this week coming, I'm going to be looking at some of the best trends in Australia, and there really are many, many of them. So that's what's ahead of us this week. There's more information on the website. There's my email address, and I'll be back with you next Sunday. Cheers.